Welcome back, everyone, to Vox Markets. My name is Paul Hill. I'm delighted today to be able to speak to Tony Gott, Exec Chairman and CEO, Vic Kist of Saietta, a leading eDrive and electric powertrain developer. So welcome, gents.
Hi.
Good morning.
Now, a lot's been happening since we last spoke, not least Tuesday's positive trading update and strategic progress report. But before we sort of dig into the details, Tony, I don't suppose you could give us a quick sort of first impressions and long-term vision for Saietta since becoming the exec chairman in August?
Yeah, sure. It's a fairly seamless transition, to be honest, from the non-exec to exec position. I've been non-exec with the company since we floated on AIM back in July 21. So I'm totally familiar with the company. Everybody's totally familiar with me. But the nice thing is that we put really great structures within the business to have information flow up to the board and very good board protocols. We've got a great bunch of non-execs in the business now. So what was becoming apparent in the summer was the scale of opportunity and the challenge it was giving the two executives at the time, Vic and Steve, our CFO, in terms of the number of issues that were being created from market pull into the business and the internal development that needed to happen at pace. And so that's why the move was asked for by the board, and I was super pleased to get fully immersed into the business. So first impressions are pretty much like they were before. But now I'm obviously fully engaged. The long-term vision remains the same as it ever was. With at IPO, we had fantastic technology with our axial flux motor, particularly well suited to certain markets. We explained that at the IPO, and actually the news over the last week has totally reinforced that. So we're absolutely sticking on the rail tracks we set out when we launched to market. But in addition to that, through extremely fortuitous, but also entrepreneurial acquisitions, especially the e-traction business in Europe, that's opened up other opportunities which were part of a fundraise earlier in the year, and specifically around our joint development contract with ConMet. So now we have real strategic vision in two very fast-growing sectors in two different parts of the world, where probably the potential for growth is at the highest. One is in trucks and heavy-duty vehicles in the US, the other light-duty in India. So strategic vision remains the same as it ever was, and we're now all hands to the pump inside the business, concentrating and focusing on those two.
Great. Well, we'll come on to the ConMet opportunity in a moment, because I know you're spearheading that one, Tony. That's sort of keeping you awake at night, to say the least. But turning now, Vic, in terms of the strategic direction, I know when we first chatted at the IPO, the business had sort of concentrated more on the AFT electric motors, but now has moved into sort of like the whole full shebang eDrive and electric powertrain sort of systems and solutions. Can you take us through the logic and sort of like how that, how you've positioned that and why you've done it?
Yeah, pleasure. It's not a new idea. When I joined Saietta in 2017, I recognized the axial flux as, wow, you can actually get more miles out of the same amount of energy, i.e. you can work with a smaller battery. But back in the day, like electric forklift trucks and golf carts, there was a motor supplier and there was a transmission supplier and there was an inverter supplier, and then the vehicle manufacturer had to integrate it together. So for the last 5 years, I've always wanted to integrate and create a full powertrain. As you know, I'm ex-Cosworth. I love powertrains. That's what I do. But to then integrate it together, you need the power electronics, you need the software, you need a transmission. We don't know anything about a transmission apart from concept design. And we didn't have the money to become an eDrive solutions company. And that's why the IPO was so powerful for us. Scary at the same time. I remember the early look and see meeting. I've never listed a company, and the first person I rang was Tony, as in help. So, and Tony and I have known each other for years, and I am delighted to have him on board as an executive. So we are charging ahead. ConMet is good. India is good. We have the first systems out there in the field testing. The feedback is amazing. The motor is powerful. The processes are coming through. The production machines are coming online, and yeah, they take a year. I mean, you do an IPO, you order the machines, and then you have to really massage that process to get those machines not only in Sunderland but also in Delhi. So it's all hands to the pump. Very pleased with this executive team. It's like a really tight team. Whereas the business unit managing directors are starting to own their section, like Sander with Propel, Dave Pates on light duty, and Duncan in Sunderland. So yeah.
And with the systems, the big advantage, I guess, is that it accelerates that whole adoption, doesn't it, by the OEMs? Because rather than actually having to integrate lots and lots of different individual suppliers, which can be complex at their end, they can just lift and shift a big sort of like eDrive sort of like unit straight in there, and you've done all that integration for them.
We reduce the amount of work they have to do, therefore we can charge more money. So it's all about creating, like at the IPO, the baseline business case was we're going to make I don't know, 100,000 AFT motors and sell them with a margin. Now, as you can see in the press release from May on our website, you can basically, with an inverter and a transmission, you can charge a lot more money. So eDrive, full eDrive solutions, that's what we will focus on. And again, without that eTraction acquisition, we wouldn't have had that source code. So for that reason, we're still 3 years ahead of schedule, basically.
But it also improves the reliability, doesn't it, of the unit for the OEMs? It reduces their errors, and reduces all their internal cost and testing and complexity and people. So I think you're basically doing you're doing everything for them. Now, Tony, I know investors are absolutely itching to get into ConMet, and I understand obviously it's commercially sensitive because it's such a major sort of like flagship agreement. But can you sort of like just talk us through about how you see that one progressing? Because as Vic just explained, it seems though you've got an inverter in there to help recharge a refrigerated trailer, and you've got the motor to help drive the actual truck itself all into one unit. But that'd be a simplistic just from me as an old boy engineer.
Yeah, and I'm not going to expand any further technically on the solutions, because all I can say is that they're breakthrough solutions really for the market, and that's what really stimulated the interest from this huge company in the US. And the technology we're working on together, it is a brilliant and tight team. The US guys are with us in Holland as we speak, a big group of people developing these products. Now, when we went for the fundraise, there were 2 products that we were looking at. One of the reasons why we have made these adjustments to our short-term plan is to do with a growth in that scope of work, which we're jointly developing with ConMet. So now it's 3 products, which is very exciting because that was driven from market feedback. ConMet have first-class relationships with the global truck OEMs. They've had those relationships for 30 or 40 years at the most senior levels. And so we showed a presence at the IAA exhibition in Hanover last month, where we showed none of the projects that we're working on with ConMet, but we were involved in conversations with OEMs, which ConMet facilitated. The feedback from the explanation of the technical direction we were taking was extraordinary. You know, it's a real wow. If you can bring those products to market like that, that is fantastic. But also, have you thought about this? ConMet asked us while Vic and I were in Hanover, can we consider taking on yet another product within the development agreement? And of course, yes. We've got some super clever engineers, so they're able to basically modify one of the solutions we're working on to make it relatively easy to bring through to production and then to market. So the scale of the opportunity is enormous. It just grew again over the last 2 months. The progress, everything's running at pace. It's on budget, it's on plan. The technical parts are being now committed to prototype sourcing routes. And our drive at the moment is to get them on running vehicles in the first quarter of next year.
Brilliant.
So it's going extremely well. It's going even better than we thought it was. We thought it was amazing at the fundraise, but it's even better now. So,
and is does the end demand? I mean, I know there's lots of legislation in terms of banning combustion engines in Europe coming in about, I think, 2030 and stuff like that. But does the cost of living crisis make any difference at all? Or is it basically, is it because of the decarbonisation requirements and the sort of like moving off the dependency of Russian oil and gas and that sort of stuff? Are they just too big and all moving to all things electrical, etc.? Is there just too big a sort of tailwinds to really sort of like, you know, make any dent with the, the cost of living crisis? It doesn't really matter.
No, it doesn't matter to us in the short term. Remember, this whole electrification market's moving. It's a very strategic move. So these changes to, say, the urban environment on last mile delivery vehicles, etc., and the cost and energy source drivers that are forcing the commercial vehicle sector to move. These are all things that are going to really materialize in 2 to 3 to 4 to 20 years when the whole world has now changed. So we've always said that we've got the right products, we're at the right time with the right people, and it is coming to pass. You know, everybody sees our products and our solutions as very much a solution for them, practically and economically. So it has no effect on us for the short term. I mean, it affects every single one of us and every single one of our employees. And as an executive team, we're very conscious of that pressure on individuals and our employees. But at business level, no, it's not it doesn't affect us.
Okay, good. Now, just turning to all things India, Vic. I know you've been talking, you mentioned it before. Can you give us an update on sort of like the joint ventures out there and the sort of the moving into sort of the, you know, the 2 or 3 wheeler type markets, the e-scooters and the electric tuk-tuks and stuff?
Yeah. Well, basically, we're sold out, so that's the end of that. No.
So how are you manufacturing it then, Vic?
No, it's see what I'm very, very proud of, and having lived this thing for 7 days a week for so many years, with outstanding support of well, may I say, the first good functioning board I've ever experienced, and all of that is thanks to Tony. With India, we always knew that it was going to take a couple of years to create that trust, and what we did with Padmini, even before signing up with ConMet, is to create that relationship of trust with those manufacturers you already need to have an established relationship, and that's what Padmini has. And yeah, we took a punt in a way, because it was like, we are going to lose 50% of our future profit in India. But at the same time, if you can penetrate the market deeper, faster, years faster, and that's the beauty of Padmini. So we've now got a dedicated managing director on the joint venture. He actually came from our team in Oxford. So Kabir is the owner of Padmini. We're very close to him. We elected this person, Prad, ourselves. He's in India like 3 weeks in the month, and they've just come back. The first vehicles are already on the road. They've done their energy consumption cycles. We're right in the depths of that proof of concept, and people are not just going to throw a 7-year supply contract at you. They want to see the hardware, they want to feel the hardware, they want to test it, and at the same time, we're being turned inside out on our quality processes, on our production processes, the supply chain selection criteria. And I must say, eTraction was great, but don't forget about Sunderland, because they've been making 25 million electric motors. They've developed quality processes that were approved by GM, Ford, Renault, etc. And as you know, we kept all of that team together. And that's where the stars are really aligning, but it's all hands to the pump. So for that reason, I can probably explain you 15 serious leads in India, but we're only looking at 2. So only 2 are on our radar. The rest talk to you in February. Because otherwise you just drown, basically. And the same with ConMet. We were at Hanover at the IAA, and all of the big 7 came to see us. All of the US truck manufacturers want to talk to us, but we only need about 2 launching customers, and we're only 200 people, don't forget, not like VW with thousands and thousands of engineers. So we have to be extremely focused and extremely disciplined, and that's also one of the reasons why the trade update was or is as it is.
And how will you make the volume, Vic, in terms of for ConMet and for Padmini and the Indian market? Is he going to start in Sunderland first, get the initial volume, and then kick it into your joint ventures in locally, or how's it going to work?
Yeah, if you read that Sunderland takeover announcement in detail, or I think second half of November, we're doing an investor visit around Apeldoorn, Amsterdam, and if people like, also Sunderland. Don't forget, we took on the Sunderland equipment. So there's effectively 4 production lines there. One of them, we can use the equipment to repurpose it for the AFT production line. But there are 2 production lines that we've kept intact. And essentially, they have a production capacity of 500,000 motors per year. And you could scale it up even further. Now, they make the fairly straightforward RFT motors, which you can also see in our trade update. But what we've done really clever is we've scaled it up, and it's already on the dyno in Hayford. And that allows us to access another market segment below that 6 kilowatt region of the AFT motor. So we are now fully into the 4 kilowatt market range, which the Indian customers want, but also one of those motor topologies is perfectly suitable for that in-wheel generator for ConMet. This is why we can't always talk about it as the way we would like, but we are a very strategic team. We know exactly what the market wants in 4 years' time. We walk back to today, and we make very clever steps to get there in the most efficient way. Because otherwise you couldn't do what we're doing with a relatively small fund.
What about the outboard motors? Because I know you were charging ahead on that one as well. But as you rightly say, I think you've got to decide, you've got to prioritise on certain things. And how's that one sort of developing? Because obviously a lot of Europe is moving to all electric outboard motors for its boats.
Yeah, there's a couple of things going on there. First of all, we only launched Propel 11 months ago, and what we've learned is that Torqeedo is changing the distributor network. So they've cancelled a lot of their big distributors. Those people are looking at us as in like, ooh, that looks like a better alternative to Torqeedo. So we're engaged with about 6 or 7 distributors. But at the same time, they're like, well, it's a rocky market out there. You've only been around for 11 months from a Propel point of view. So let's see if this really works. Send me a couple of samples. We'll try and break them, and then we'll let you know. So all of those tests are going on, but they take time. At the same time, we partnered with a battery company at the beginning of the summer. We integrated all of that software together, so the battery and the motor talk to each other. And then lo and behold, quick takeover, that company was bought by a massive Japanese company, and suddenly their management has changed and their priorities has changed. So we effectively lost our battery supplier, completely out of our control. On top of that, what we see is that Propel has been underspending pretty much for the last 12 months. So it doesn't mean that we are, well, because we're underspending, we're launching a little bit later. So we balanced ConMet, India, Propel, and the array of other inquiries we get on a daily basis, and we said, okay, let's slow down a little bit. We don't want to trip over our own feet. But Propel is doing really well. I was in the boat all weekend last week testing with the team. We found a new battery. I didn't believe it would work, and if I don't believe something, just like Tony, I want to feel it myself. So I was literally with a massive winter coat in the boat testing it, and it
works well.
Yeah.
Okay, good. And what now, just Tony, just in terms of the sort of the strategic priorities. Obviously, you've got the ConMet, you've got the India, you've got the outboard motorboats. Which areas? I know Vic just touched on it. Which areas have you decided to sort of de-emphasize?
Yeah, I mean, I'm just picking up on a couple of points Vic said. We're only 200 people. I mean, we're 28 people just 18 months ago, so we've grown, but. Looking at the avalanche of requests that we've received over the last 18 months, it's just clear and obvious that there's too much immediate demand out there for some of the technology. Just conscious the screen's flickering on my...
I think it's your lighting actually, Tony, but you can't do much about it.
It's those LED energy saving lights that are fitted.
But no, so we're a relatively small company, and our approach now is to prioritize those things which are ConMet in India, because the huge potential is sitting behind that is now being validated to us. So the decision moment to concentrate really came just last week in the board. Wednesday, so we moved very fast with the trade announcement because it's a significant decision, and that decision was based on the formalization of the third product for ConMet and some amazing feedback from the team in India with their relationship with the client. We're now in their program. We're now. It's as much of a commitment as a huge global OEM can make at this point in time. So that is a tremendous tick for us. So right, it's now real. We have to just put all our efforts behind that. So of the array of other things, then it's clear to us those people that can take basically an off-the-shelf design or engineered eDrive that we currently have, we'll talk to you, because it doesn't need a lot of supply chain or commercial issues. It doesn't need further engineers' time devoted to it. We can help you. But if you want a bespoke design, we can't. We just do not have the bandwidth to do it. Frankly, the priorities for us as a business are clear now. Yeah. So that was basically the very clear-cut decision. So we're able to prepare the board, go through all those clients or potential clients, and just take them off, especially where there was no commitment. We are, if there isn't already a commitment that we've made to another company, we'll fulfill that. Absolutely, we're not letting anybody down. It's just no new people with bespoke requirements.
Yeah, so allow you the scalability basically to
yeah,
you don't individually customize. Now, just putting all that together, I know you've got sort of like a cash position of 23 mil at the end of September. How does that sort of all work through in terms of sort of working capital, I don't know, tooling requirements, this sort of stuff, and then your growth trajectory? I did see Canaccord's put out some new numbers. I think they've got just less than 10 million of revenue for FY23, going to 32 million in 24. We become EBITDA positive and cash flow break even by the end of the year. And then you really do, they've got a sort of like 101 million of sales in 2025 and 60 odd million of EBITDA, so become highly profitable. Can you just talk us through how you're seeing the sort of like just big picture in terms of that sort of like commercialization revenue sort of coming through?
Yeah, pleasure. I've actually got the report from the 5th of January, which has lived on my desk. So the Alex Brooks report. Yeah. From the 5th of January, next to the one from yesterday.
Yeah.
And in the end of the day, if you looked at our sales funnel a year ago, it was full of startups. How can we have 50 motors of this or 50 powertrains of that? Oh, and we can't pay for the engineering because we haven't got any money. We've cleaned that up. And it was tough. It was tough because some of these companies we've been talking to for years. But now, looking at the market, I think what we've done really clever is that of the 3 ConMet programs, there are 2 that are not safety critical, and like what means they don't drive the vehicle as such. They are a charging solution, so they are relatively simple to bring to the market from a validation and liability point of view. So those should start coming online before Christmas next year. We know that the customers are already lined up, that relationship of trust is there, the supply conditions are already agreed because they're existing clients already, and then 1 year later comes the big truck drive solution that was described in the RNS. So that means in terms of the amount of turnover you generate over the next 12 months versus the amount of turnover you will generate in the 2 years after start of production, they are totally disproportionate. So sure, we can try and, I don't know, I can sell some extra stuff and make that extra 5 or 10 million, but it will cost you probably 50 million turnover 18 months down the line. So hence we had to swallow that bitter pill in this rocky phase of the stock market. And the same in India. Again, if we would talk to VW, and Tony is in a way ex-VW, I'm ex-VW, Dave Pates is ex-VW. If we would talk to a client in the automotive industry, it would take another 4 or 5 years before that is in production. And the price war is going on because the Bosches and the Siemens, everybody's like all over that main market with the Ford Mustang and the Jaguar. So I think we should be truly proud of having the discipline to leave that main market alone, focus on light duty, and we've got the route to market with Padmini. Heavy duty, we've got the route to market with ConMet, and basically Propel is a showcase with eye-watering margin that doesn't really matter when it scales up. It could be in a year, it could be in 6 months. So yeah, we are Saietta, so we are convinced of our own story, but we've thought about it so thoroughly.
I can add to that, Vic. I think one of the important things in our strategy is that we have very large experienced partners in region who are very used to setting up high volume manufacture. And this is not by accident. It's because the next phase of the company development requires that heavy lifting in region. establishing the supply chains and putting the manufacturing capital equipment in place. And for both of those, we have a position now that shares the investment in that capital equipment. So in essence, we're heading towards having a very, very significant market share of a very large and very fast growing sector. And we're only paying half of the bill to supply the working capital and to support it. And so that's why financially it just makes absolute sense. We're very pleased we've got Steve Harrison with us, a brilliant CFO, especially in strategic modeling. And the number of models that we've seen across the business has really influenced both our partnering decisions and our investment decisions and our call to market when we need it. So we're in a good place at the minute, but it's by design, I like to think, rather than by accident.
Yeah, no, I can imagine being the next finance man. Steve's certainly been burning the midnight oil, doing all those sort of like projections and scenario analysis. That's for sure.
Yeah.
Now, Tony, is it a largely an organic strategy from here on, or is there also some M&A opportunities? Because I know Vic has just done a fabulous job in terms of picking up sort of eTraction and the old ZF factory up in Sunderland and other bits and pieces. What's your view on sort of M&A?
I think our total concentration now is let's get what we've started going and let's get that completed. That we think will put us in an amazing position, but in probably the 2 to 3 year time scale. So acquisitions in the short term, no, that's not the focus of the board. It's not the focus of the business. We need to concentrate on bringing these engineering solutions fully into market now, and that's our task. So you never say never, but certainly not for the short term. No.
Okay, and then Vic, just finally, in terms of sort of supply chain and the Sunderland facility, when do you envisage the Sunderland facility to be sort of like, fully utilised, sort of full capacity utilised? And likewise, are you having any issues in terms of, I don't know, getting specific parts or anything like that through the supply chain, or is it sort of like it's difficult, but you can manage it?
Yeah, well, first of all, we can manage it because we're very good planners. But we are delighted with having the Sunderland team on board. 50% of the team, 40 people in Sunderland, are actually the line workers. They have spent a number of weeks already in Hayford working with our Midlands team in learning how to put the AFT together. We couldn't get the coils made, the essential part of the AFT motor, so we've brought that in-house already in Sunderland. I think they're now in the process of setting up the stator potting because we've got so much space in Sunderland. And basically Tony and I know the ramp-up rates from January to April as the volume and the capacity going up. Don't forget, most of the supply chain was already biased towards India because we used to manufacture our old DC motor in India. Again, something that Pratt was very closely involved with. But a big thank you to the UK government because we took on Sunderland and we are very, very close with APC. Sorry, I've just completely lost my. We're very close to APC in Warwick, the Advanced Propulsion Centre, and we were granted an extra grant, which we applied for immediately when we took on Sunderland, and they really help with the ramp-up cost. So fully utilised, probably 2 years away. But don't forget, it's 1.5 football pitch of electric motor manufacturing facility, and even ZF didn't fill it. It was half empty. But the point is, there's 4 lines there. We're repurposing. One of the lines might go to India, depending on my business trip, first half of November. So I'll be out there for 2 weeks. And then obviously we're bringing all of the ConMet applications in-wheel generator, but also the big motor at pilot level into Sunderland. So look at Sunderland as that huge process development plant to create recipes that we can roll out globally. We just need to get it to the highest ESG level, because we do still believe in ESG, but we might need some extra government support on that.
Right. Okay. Well, it gives you a lot of growth potential there, doesn't it? And if Canaccord are right, and you hit sort of like 100 million of turnover in 2025, then that will definitely sort of like improve the operational efficiencies. I'm sure of that whole site. Now, just in terms of just finally then, Vic, Newsflow going forward, contracts, or is it for the next 2 or 3 months, is it really just head down and just carry on delivering, or you going to announce anything at all from potentially from stages of the ConMet deal progress and sign off maybe of the India pad media and that kind of stuff?
Yeah, again, like we said in the pitching, like we did with the fundraiser over the summer. Tony and I and Steve, we do not shout about things before it's signed. So this is automotive. It's fairly slow pace, but once you've got the contract, you're in bed for like 5 to 7 years. So and I know the market keeps forgetting that, but we will keep reminding them of that. It's Newsflow short term. I am working on something, and it's European, but I'm not going to tell you anything about it. But it is of significant volume. It's last mile delivery application, so it's totally AFT, because we do want 1 or 2 of the perfect customers in Europe. We've got the Mets in Amsterdam, so a big trade show where all of the Propel machines will be on display. Sander will be there. Tony and I will be visiting. So if you fancy a trip to Amsterdam, come and see Propel. And then, of course, as we promised over the summer, we expect the Newsflow to pick up again in January, February, with most likely the next contracts to land. But these are complicated contracts. We've got Field Fisher, our rock in terms of our legal support, but supply contracts take time to agree. ConMet was 5 months, remember?
Yeah, well, and also I guess being with sterling being so weak against the dollar and also the euro, then you've become a low cost producer now as well out of Sunderland, which is always helpful. Bit of a good tailwind. Okay, well, thanks very much, gents, and look forward in hearing how the group develops over the next few months. So big congrats on Tuesday's positive trading update, and as I say, ConMet and the Indian opportunity look absolutely enormous. So. Hopefully that will really sort of come to fruition in the next 12 months or so.
Yeah, thanks.
Great.
Thank you.
Well, thanks, guys.
Thanks for having us. Thank you.